It was a strange day in the stock market today. Looked like multiple times the market was trying to bounce up, but ended up pretty much flat. At least for the Dow. The Nasdaq was up a little bit, like 0.5%. But strange things going on. But I want to talk about REITs today, and if they are beaten down enough, and if they are a good bargain now, even with the uncertainty going forward. But first, last night I was up late and I saw the Dow futures were down about 700 points, yet oil was up $3, and today it was up about 27%, crude oil, along with Russian oil stock Gazprom up like 10% and Lukoil up like 20%. So that is very suspicious. When you see stuff move like that you don't know why, there usually is a reason, you just don't know it yet. So what could be the reason? It's probably that either there's a rumor or there is a real deal in place between Russia and OPEC countries to limit production of oil. Maybe that's why oil is up so much, and Russian oil stocks were up a good amount as well. Who knows? But that's a good clue to when you see things that you don't have an explanation for. It's not that there is no explanation, you just haven't heard it yet. The news hasn't come out yet. So what's going to happen with oil, who knows? But definitely caught a bid today on some kind of rumor or unknown news so far. But looking at REITs, real estate investment trusts, I haven't looked at a chart of them in a few days or a week or two or something, and looking at them is pretty amazing that they are down. And I'm talking about the REIT ETFs. So these are ETFs that own a whole bunch of REITs, like Vanguard's VNQ, and also the other ETF IYR. I think that's I don't know who owns that, but anyway, these are ETFs that have a few hundred different REITs inside of them, and yet they've been knocked down in the last month, something like 40%, 30-40%, something like that. So that is pretty crazy. And I remember looking at REITs over the year and last year and this year, and they didn't strike me as that attractive because their yields were like 3% or something like that, which not that great, let's be honest, especially since it's considered income, not a dividend, so it gets taxed like interest and not like a long-term dividend. So even if you hold it in your IRA or 401k, which is sheltered from tax, it's still not a very good yield. But now these things have come down so much so quickly, they're definitely worth a look. And I remember just being on, I don't know, whatever, Yahoo Finance or something. There's always articles about, or there was, even just a month back or 2 months back, about like the most talked about REITs that I've seen are which is Realty Income, and OHI, which is Omega Health Investors. And I see those, they were always kind of the popular REITs that are put in articles and all of that stuff, and always talked well about that, you should buy it and all that. Those things are down 50% or more back to like 2012 12 prices, something along those lines. Are they going to recover? Yeah, most likely. But the reason why OHI is down, I'm guessing, is because it's a REIT that leases properties to senior health facilities. And so with the whole virus stuff, you see these senior living communities get wholly infected. And so there's a lot of fear about that. And so maybe, who knows, maybe even some legal liability on the part of at least the companies that are running these senior living care facilities. There's just a lot of uncertainty and fear at the moment, and so these things are down huge amounts. However, should you buy OHI or O? Well, in times like this, unless you know these REITs inside out, and you've analyzed where the REITs are and that they're diversified and all of this stuff, and what their cash flow is going to look like and all kinds of stuff like that. It's really just kind of a crapshoot if you're buying just one of these, OHI or O or any single REIT. So if you really wanted to analyze all the REITs and figure out, should I buy office REITs, residential REITs, healthcare REITs, storage REITs, you need a whole research team to do that. Okay, so don't just go picking one or two REITs if you're going to buy them just because you've seen more articles on Yahoo Finance or Market Watch or something on a particular REIT, so you think it must be good. It has that inherent, if enough people talked about it, then it got the seal of approval, because those people that wrote those articles a few months ago about talking these things up, they're not refunding your money if you're down 50% on these things. You're on your own, so keep that in mind. And so I don't know how much lower the market's going to go in general, but these things are smacked down. I'm talking about the ETFs, REIT ETFs. They are smacked down a lot. And so I'm looking at them as, how much lower can they go? Can things get more worse in the housing and real estate? Sure, of course, and they're gonna. But are people overreacting right now? Yeah, most likely. For them to be down like 40-50% in a month, yeah, they are. But like I said, the REIT ETFs are down less, like I think, 40% or something like that. But it's still huge. And if things don't turn out to be as bad, or even if things do turn out to be a little bad, I think you're in a much better position buying a REIT that's 40% off, that has 200 different REITs in it, or 184 as Vanguard has apparently, than you are trying to pick individual falling knives like OHI or O or any of these other individual REITs, because you're not going to really know that well which ones are going to come out ahead. And also, depending on how much you're willing to put into each one of these, even if it's 1%, 2%, 5%, 10% of your portfolio, you would have to, that would be 10% would be risking a lot, and you would have to really know these things. You'd be much better off just kind of doing the research of, has the REIT kind of hit bottom or massive maximum panic so far? And if they have, then start putting some money into them. And I think even if things are drag on a little longer than expected, they will still, in 3 to 5 years, you will get, I believe they will be higher. They won't, I doubt they'll be at new highs, but I think they'll be higher where they are than where they are now. Of course, this is not a recommendation to buy or sell these, but while you're waiting, you get a much higher dividend now that they've fallen so much. So it might be something to put away in your IRA or 401k for that tax-free income. And while you wait for things to recover or some light at the end of the tunnel with this whole virus stuff going on. So, and is there light at the end of the tunnel for the virus stuff? Well, in my opinion, I think it's gotten a lot better, it seems, in terms of, there was an article on Bloomberg last night that in Italy, or at least in the Milan region, their statistics show that the average age of the people who die from coronavirus are 80 years old, and that 99% of those people who died had at least one other pre-existing health condition, meaning high blood pressure, heart condition, diabetes, all those kinds of things. So, obviously it's bad for older people, especially if you have medical conditions, but it's not the end of the world. It's not zombie land. It's nothing like that. So right now the biggest risk is how long we are trying to contain this thing and ruining the economies all over the place in the process of doing that. So I don't know where it's going to end. There's already talk of vaccines, therapeutics, things that they're trying that seem to be working. Like I said, there is some, seems like there's some light at the end of the tunnel here. And so maybe just one really bad earnings report needs to come out, one earnings season where they throw everything in the kitchen sink in their numbers and come out with some really bad numbers, and more people panic or whatever, and then that might be the bottom, or I don't think it's going to be a V bottom, it may be like a U bottom, but I'd much rather be buying things at 30-40% off the highs than buying them at the all-time highs. And so you see what happens when you do buy at the all-time highs. Some little thing that you're not even aware of, or that's not even on the radar, could come out and really ruin your your financial plans, let alone your health plans. And if you think about it, right, the people who were in all the way at the top and never got out, and dollar cost average and buy the dip and all that stuff, when they're already in, say, a REIT or the S&P 500, and S&P is down 10%, down 20%, they may average down a little bit, but when it gets down 30%, 40%, they usually, it's a real shock on your emotions, and you kind of panic or freeze up, or you want to get rid of the pain just by selling everything and feel better about it. And that's usually the bottom, and that's usually why the rich people keep getting richer, is because, one, they have more patience where they can wait stuff out, they have cash on the sidelines, and so they wait for things to get really ridiculous and out of whack, and then just calmly go in there, buy a prudent amount for the risk, and spread their risk out, and sit on it until the euphoria is back again, and they're the ones selling into the euphoria and buying into the fear. And if you don't believe me, just a few weeks ago, there were articles on Warren Buffett and his $128 billion cash hoard, and he was getting criticized by a lot of analysts for how come he's holding so much cash. You know, he could have been having a higher return on his Berkshire shares if he was invested and stuff like that. They were all playing Monday morning quarterback with his cash pile, and so that's usually the sign of a top, and in this case it was, because you see now he's sitting with $128 billion. Now, not that he's not affected. I mean, he owns Delta Airlines and Occidental Petroleum, which are down a lot, but he has all this money, and you could be sure he is picking out the best deals that panicked people are basically giving away, or will be giving away if the market heads down lower. So learn from people like that and have some patience. Wait till there's real blood in the streets. Wait till things are really out of whack. And it doesn't happen often, but when it does, you can make some really good returns going forward. So that's my talk on the stock market and REITs. If you liked it, leave me a comment. Let me know if you think REITs are cheap right now, and if you're thinking of buying them, or if you don't think they're cheap and that they're going to go lower. If you like this video, leave me a comment and subscribe if you haven't done so already. Thanks for watching.